Hello everyone, and thank you guys for tuning back to another video. As always, if you enjoy the content, make sure to leave a like and subscribe for more. So a little recap since last video. I'm still behind on trade videos because like I said before, back in school, so that kind of interfered a little bit with my trading and my uploading schedule, but I'm still working on trying to catch up, and I will be posting these videos in the upcoming days. But what happens is last video, we ended up taking a $230 loss on a trade, and that set us back a little bit because I was planning on reaching close to 4,000, and we dropped from 3,700 all the way down to around 3,400 something. And we made up most of the loss. We were down around $230. Now we're only down $109 since last week. So we made up almost 50% of the loss. I'm working on trying to make up all of it and possibly end in the green since that loss. But this week we're up around $54, I believe. We traded the Tesla Iron Condor. But that's not going to be what I'm going to talk about today. What I'm going to talk about today is some trades that I ended up taking a week and a half ago. And those two trades were on GLD, which is gold, and MCD, which is McDonald's. So I'll go ahead and start off by explaining the GLD trade. And if we go down, I believe what I ended up doing was purchasing a call option, and that is correct. I ended up purchasing a $140 strike call, and I bought this at $2.42, and I got billed for 4 contracts, so a relatively small position, not too big. It was around $1,000, and so we ended up swing trading this one. It ended up being, I believe this was a Friday, because I usually don't hold options that long, so I'm pretty sure September 6th was a Friday. I can go back and check, but I'm pretty sure it was a Friday. And so what we ended up doing was selling on Monday morning for a small profit. I was just trading swing trade because this was still when tensions were pretty high because of the trade war news, and tensions are still pretty high, but they've kind of calmed down a little bit in these past couple of days. But so it was a quick and easy swing trade win, not really too much. It was just kind of basing it off the support and resistance. It's kind of how gold tends to be negatively, what's the word that I'm looking for? It basically does the opposite as the stock market most of the time. So if you look at it compared to the indexes, as the indexes go down in value, gold is going to go up in value because gold is seen as a safer investment. But now I'm going to go ahead and explain the MCD trade. And what I ended up doing on this trade was also buying calls because the day that I traded it, which was September 10th, it was a day trade. This one, MCD was testing its weekly resistance or weekly support levels, and so it seemed like a really good buying opportunity, considering that it was down about $7 from its weekly support or weekly resistance. So there was a lot more room to there was a really big risk for reward ratio on this one, and that's why I ended up taking this trade. And you can see we ended up making a pretty good profit in what was not too long of a trade. We entered the trade at 9:58 in the morning, and we ended up closing the trade at 10:36. So about a 40-minute difference between the buying and selling. So that's relatively short amount considering it happened in the same day and it was also in the morning. So pretty good trade. Almost around, I believe that's 70, almost $100 trade in relatively under an hour. So that's $100 per hour. Good work day on this one. But I can go ahead and hop over to the Thinkorswim charts and kind of explain a little bit more as to why I took these trades. So this is the GLD chart, and what I ended up noticing on this one was that going into Friday, which was the day that I traded it, GLD had been downtrending quite a bit. You see that on Wednesday it got to a high of $146.82, so basically almost 147, and it started to downtrend fairly quickly. It got as low as to the about the 141s, and so in my opinion, I was also looking at the RSI and the MACD, so that to me indicated that it was indeed oversold. And what I was trying to do was trying to figure out what would be a reasonable entry price to try to mitigate the list and allow myself to have a good profit margin compared to the risk ratio. And so what I ended up doing was going back a couple of weeks to try and find a support area to see what would be a smart idea to base the entry on. And I ended up noticing that a couple of days, about a week prior, gold had a pretty big move towards the upside, and we can see that the area where it happened was around the $141.91, so right around hovering below 142. And so that's what I based my entry off of. And you can see that on Friday, going into the pre-market and into the morning, it gapped down even further from Thursday, and it got to a low of 142. And so we were able to get a good entry because I looked back at the previous support, and that indicated to me that 142 was a solid entry point, and that's when I entered my calls. And you can see that throughout the day, this is the 6 months, but if we go ahead and switch back to about the 20 days, we can see that the pattern does still show that very similar indication. Where's Friday the 6th? Right here. Friday the 6th, we can see that upon market open on Friday, just trading right around the 142, and so we can see that it kind of traded sideways for the first couple of hours into the trading day, but then you can see it had a nice big uptrend movement going up as high as 140, almost 143. No, actually, it went up as high as 144. So we definitely left some profit on the table on this one. But nonetheless, what was really good about this trade was that we executed it compared to a price level and pattern which it had repeated in a previous time frame, which was about a week ago. So overall, this trade really wasn't too difficult to identify. It was just kind of looking at previous supports on GLD. So now I'm gonna go ahead and hop over to the MCD chart and explain that one. So this is the MCD chart, and what caught my attention on Tuesday, September 10th, was that MCD started to quickly downtrend from the previous day. You see it was trading at a high of around 220 and started to downtrend. The day didn't start off too good for MCD, and it quickly got worse and worse after, especially after it crossed this support of 215. After it broke that, it started to gap down even more. You can see by the big red candle, got as low as around 209.28, and so the reason why it started to kind of consolidate around the 210 area was because that had been a pretty strong support on a previous month. Go ahead and look back on the monthly chart. We can see that that second line that I drew had been a pretty strong support earlier in August. You can see that during August it got as low as around 209.40, and it kind of started to consolidate around that area, and then it had a big move up all the way up to 220s. And so I was looking for a repeat of that, and so once it started to consolidate a little bit, you can see that it traded sideways for a bit. That's when I decided to make an entry. You can see that after that big drop, kind of traded sideways for a little bit, and we can see this better if we look back into the 20 days. So let's go back to September 10th. It's over here. Kind of traded sideways after that big drop, and then that's when I entered my call position. You can see that it did a pretty good job at repeating itself and making that same pattern of bouncing off that 210 support area. Got as low as what was that, 208, And if I remember correctly, I think I entered the trade around 209.25s. So we didn't exactly call the bottom because it did drop all the way down to 208.70s. But we were pretty close to calling the bottom. So overall, this trade is just focusing, like I said, on the support and resistance levels, which is what I tend to base my trades off most of the time, because patterns tend to repeat themselves. But you can see that after it had that drop all the way down to the 208.28 area, it had a nice small gap up of around $3 all the way up to the 211 area. So overall, I think on this one was around a 70 cent move where we profited, because I tend to look for small quick gains and lock in profits so that I don't have to risk too much money by allowing the options to lose value. But overall, that's pretty much it for this video. I hope you guys enjoyed, and I will see you guys in the next one.